What is the difference between block deal and bulk deal? Let's understand. There are 6 major differences between a block deal and a bulk deal, and we will try to understand each point one by one. So let's begin. In a block deal, there has to be a more than 500,000 shares, or the value of the block deal should be more than 10 crores to be qualified as a block deal. In 2017, this amount was 5 crores, but after 2017, the amount has been raised to 10 crores. So any deal that a promoter or any other party wants to execute in the block window, which we will understand later on, it has to be of value more than 10 crores or more than 5 lakh shares. In case of a block deal, there is a special trading window provided, and the special trading window has a special timing. So there are 2 sessions in this special trading window, a morning session and an afternoon session. In the morning session, the trades are executed between 8:45 and 9 a.m. and in the afternoon session, they are executed between 2:05 to 2:20 p.m. Because there is a special trading window for block deals, the volume of the block deal is not represented in the normal trading session. So as a retail investor, you don't see the volume of block deals in the normal trading window, or it doesn't reflect in the normal trading session. So anyone who wants to participate in a block deal has to place an order plus minus 1% of the previous day close price if it's a morning session, or in the afternoon session there is a price discovery of between 145 and 2. So whatever is the average price trading between that time frame, that is being set as the price discovery, and the orders that can be placed is in range of plus minus 1% only. And if a block is placed for sale or buy, and if there is no matching seller or a buyer, or if the seller and buyer matching quantity doesn't match, the unexecuted orders are cancelled by default. So it doesn't flow into the normal trading session. So now let's look at each of these 6 points for the case of a bulk deal. Let's understand each of these from a bulk deal point of view. So any order that is classified as bulk deal if 0.5% of the equity change hands, and if that 0.5% of the equity includes number of shares more than 5 lakh or more than 10 crore in value, it can be executed as a block as well as or bulk both, or either or. So a promoter is selling, and if he's selling a very large chunk of his shares, which classifies more than 10 crores or which classifies as more than 5 lakh shares to be sold or purchased, then he can do a bulk deal or he can do a block deal. Either or is good enough. So in case of a bulk deal, there is no special trading window, and the orders are executed between the 9:15 to 3:30 normal trading hours only. There is a pre-market orders as well. So bulk deals are like normal deals like you and me as a retail investors do in the market. Only difference is the quantity is huge, the amount is huge. So because this is a normal orders, this is done in a normal trading window, so the volume also reflects in the normal price charts that we see. So as a retail investors, we can also participate in a bulk deal. Bulk orders are executed in the normal trading window, and so the bulk orders price discovery is based on the circuit limit for that stock. So if a stock is trading at 100 rupees, and if 20% is the circuit limit, so then from minus 20 rupees to plus 20 rupees, the orders can be executed depending on how the deal has been found between both the parties. And let's say if a person is willing to sell his large chunk of orders, and if the buyer is at say 80 rupees, still his orders will be placed at 80 rupees, but all the orders from say 100 rupees to 80 rupees will be executed. And it can so happen that the bulk buyer that is sitting at a lower price point may only have say 70%, 80%, 90% of the total amount that he was willing to buy, and the unexecuted order remains. And if a bulk order is being executed, it can so happen that the buyer may not get the total number of quantities that he may be willing to buy at a particular price point. Whereas in block deals, that generally don't tend to happen because the buyer and seller have a pre-agreed price as well as the pre-agreed quantities. So generally block deals, unexecuted orders generally don't happen. But in case of a bulk deal, it can so happen that if there is a too much demand for a stock, then the buyer of the bulk deal may not get the total number of quantities as well, because there can be other buyers who are also punching in the orders at a little higher price, and they may get the actual quantity instead of the actual agreed buyer. So block and bulk is very confusing, but to help you understand which one is a block deal and which one is a bulk deal, block deals means it is executed in blocks, but bulk deals means it is executed in the normal trading as a large order. So that's why the name bulk and block. Hope this helps to clarify the difference between bulk deal and block deals.